Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it to the end of the week. We got September 17th. What's going on in the markets today? The Dow is down about 200, NASDAQ down about 150. We have options expiring today. Now, options expiration day, a lot of volatility in the market. It's already moving a lot. Now, can we bounce back from here and close up? Absolutely we can. Can we drop a lot more? Absolutely. Options, when they expire, it tends to create volatility in the marketplace. Now, today the dollar is stronger again. Dollar was stronger yesterday. This is crushing my gold miner trade. My gold miner trade is not working right now. Gold miners dropped about 5%. My options, I'm out till January, down about 20 to 30%. Not liking that. But here's the thing. Okay, so the dollar is stronger, but it's stronger against other foreign currencies. The dollar is still losing purchasing power. And that's what I think the market's missing. I don't think I'm too worried about my gold miner trade. It's out till January. I think the market's going to figure that out before then, and I think they will rebound from here. What I want to talk today about is the banking system in general. Well, let's start with the central bankers. Okay, so just a week or two ago, couple of the central bankers, they were found guilty of insider trading. Now, was there any penalties? Was there any fines? Was there any jail time? They were guilty of insider trading, right? Well, if me and you are guilty of insider trading, first of all, they take away all the money and then they put us in jail. For them, no. Hey, you guys go ahead and sell your stock at a profit and we'll just call it even. Okay, so the central bankers, they're actually trading the market based upon the information. Now, maybe that's why they're holding rates at artificially low levels. I don't know. But what I do know is that it's criminal what's going on. And if it were me and you, we would be in jail. Now, the banks and the Fed, well, they're robbing us blind. Okay, there is no way interest rates should be at 0%. Now, when you put your money into the bank, how much interest do you get on your money? Now, I'm an old guy. When we used to put our money into the bank, we could get 12, 8, even 18% interest on our money. When you put money into the bank now, you get 0%. Now, we've been at 0% now for, well, basically, 12, 13 years. Now, why? We got this economy recovered, but they've never raised the rate off of 0%. They love stealing your money. Now, when you go borrow money, what rate does the bank charge you? Let's take an example of your credit card. What rate do they charge you on your credit card? Well, basically, they charge you 18%. Now, you say, well, Mike, that's a credit card. My home loan's down at 3%. Yeah, 3%'s a good rate, right? But okay, once again, the Federal Reserve is subsidizing that by printing $40 billion a month to buy mortgages every month. Now, why do they have to subsidize that market? Well, because they don't want houses to come crashing down. Okay. So what I want to talk a little bit about is how the banks manipulate the stock market to go up or down. Now, we already know that, the central bankers, they're guilty of insider trading. But what about the bankers themselves? Well, here's how it works. Okay, so the stock market is at a record high right now, right? So stock prices are at a record high, which is not probably the best time to be buying your stock. But guess what? Big banks are buying their stock back at a record pace right now. It's at a record high. Stock buybacks for big banks are record high. Now, where do they get the money to buy their stock back? Well, they get the money from the Federal Reserve. The Federal Reserve gives it to them. Now, how much do they have to pay in interest rate? Well, it's 0.75%. It's 0.75, less than 1%. The Fed prints the money and they give it to them for less than 1%. And then what do they do with the money? Well, they buy their stock back, which makes their stock price go up, which makes the bonuses to the the CEOs, they get huge bonuses. I mean, Jamie Dimon at Chase Bank, $100 million in bonuses. I mean, really, are they geniuses? Look, you give me money at less than 1% and let me go out and buy stock with it. I'm going to be doing pretty well right now. But here's the funny thing. Okay, when the stocks go down and the banks crash, well, who gets to flip the bill there? Well, the banks get bailed out. They get bailed out. You see, it's called the Cantillon effect. Now, the Cantillon effect just basically means the ones closest to the money get all the money. Okay, so the banks are closest to the Federal Reserve, so they're going to be the ones getting all the money. Okay, so they're getting this money less than 1%, buying back a record number of stocks, making the stock market go up, making their stocks go up, collecting the big bonuses, and everybody's happy. Now, okay, the U.S. government's $29 trillion in debt right now. $29 trillion in debt. Now, as a taxpayer, we have to pay interest on that. Now, what's the interest rate we're paying? Well, let's just say it's about 1.5%. Now, why in the world can banks borrow money at less than 1%? Because the Federal Reserve doesn't have the money. They have to print the money, and then the banks get it at less than 1% to buy their own stocks back. This is criminal what's going on. These banks presidents, they're not geniuses. They're no smarter than me and you. What they're doing, in my opinion, is criminal activity by robbing the taxpayer to make their bank stock go higher so they can get the big bonuses. Okay. All right, so I just don't get that. I don't get that. You see, I used to actually work in a bank. I got my degree in economics, graduated from the University of Oregon with a degree in economics, went to work in a bank. Okay, now when I went to work in a bank, the banks had what was known as reserve banking. Okay, let's say you put in $1,000. Well, the bank had to keep 20% of that, and they could loan out the other 80%, but they had to keep 20%. You know what the reserves are in the bank right now? The bank is a zero reserve banking system right now. There's no reserves required. They can make as many loans as they want because they don't even need your money to make the loans. They just go get the money from the Fed, right? So if you go into a bank, first of all, the banks do not have your money. They don't have your money. Okay, you go, well, sure they do. Mike, I put it into the bank. No, as soon as you put it in the bank, they get rid of it, okay? Okay, they give it back to the Federal Reserve. They do not have your money. When you go if everybody went into the bank at the same time and wanted their money, not a chance. Do not have it. Do a little experiment. Well, if you went into the bank and said, hey, I want to withdraw from my account $10,000 in cash, you know what would happen? It'd start to get a little weird. They'd get the branch manager to come over and he'd start talking with you. He'd start asking you, what do you need the money for? Do you need it all in cash? Because we don't really have that much in cash. Now, it even gets weird when you go put cash into the bank. You go put $10,000 in cash, they want to know where the money comes from. And you know what? They report that transaction, anything over $10,000, they report to the IRS. Go, hey, you might want to check on this guy. He's coming in here and putting money in our bank. It gets weird. It's like you're treated like the criminals when they're really the criminals. Look, they're not paying you interest on your money. I mean, pretty soon, here's what's going to happen. The negative interest rates. We're going to go to what's called a digital currency. The real dollar, it's going to disappear. There's going to be a new dollar. It's going to be a digital dollar. Now, the reason they want to do this is they want to eliminate cash. Why? So they can actually make the interest rates that you get on your money negative. So when you put your money in the bank, you put $10,000 in the bank. Well, a year from now, they want you to only have $9,000 of that. It's called the bail-in as opposed to a bail-out. Now, granted, if the banks fail, we're going to bail them out. That's just what we do. We're taxpayers. We bail out the banks. But this is a new way for them to get money. It's called the bail-in. They're going to go to negative interest rates. Mark my word. They will. But first, they got to get that digital currency in place. All right. Now, what I've noticed is a lot of branches are closing. I mean, I've opened up accounts and that branch is gone. I have to drive farther to the next branch. Now that branch is gone. Pretty soon they want you to do all this virtual banking. They want you to just go digital. Well, banks are starting to make me a little bit nervous. I don't know about you, but I like to walk into a bank. I like to see the people there. I like to see that I can take my money out. Now, some of the ATM machines, a lot of people, they're complaining that the ATM machines are running out of cash. I mean, they have to keep loading up the cash because people are taking the cash out, right? And they don't have that much cash. Now, maybe we'll have a printing press in each bank that can like print the money, just like they do at the Federal Reserve. Maybe when you come in and you go, I want 10,000 in cash, they go, wait a minute, run back, and they print it out for you really quick. Print it out and then hand it to you. Maybe that's going to be the new system. But banks are making me nervous here. They're closing. They have no reserves whatsoever. We're in a zero reserve banking system. And this banking system could be problematic. It could bring the stock market down. It could bring the real estate market down. Could bring the bonds down. Banking system, I don't know. Makes me nervous. That's all I'm saying. I'm not calling for a crash just yet, but it just is weird to me that they're the criminals. They're robbing us blind, but yet they treat us like we're criminals. It's just crazy out there. Well, today we got that stock market. I think we're going to get some more volatility as we get to the close here. We're coming into the closing hours, and with the options expiring, I think there's going to be a lot of volatility. Now you can trade this. It's been very choppy. Up one day, down the next. Up one day, down the next. Up one day, down the next. It's been choppy. Market searching for direction. Are we going to hit a new record high in September? We've had 8 record months. Up, 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 up. September, could it be number 9 at a new record high? Or will we get that pullback? Now, I'm thinking we're still going to get a pullback. I could be wrong. Anyways, I'm Tall Mike. I hope you enjoy this stuff. If you do, give me the thumbs up because I really enjoy talking to you guys. I appreciate all of you. I just wanted to let you guys know that if you really like it, hit that subscribe button. Helps me out with the YouTube algorithms. Get out there. Have a great weekend, everybody, and we'll talk again real soon. Bye-bye now.